right, well, I want to welcome everybody to this month's Red Report. We're going to kind of go through the market. We've got Stephen Dotson here with us. He is our president, one of the partners here at Red Realty. My name is Jason Fraker. I'm an agent here. So we're going to kind of go through the Red Report and let Stephen kind of explain a little bit of why just looking at one month or one segment of the Red Report or one segment of the market really doesn't give you a complete story of where we are real estate wise right now for the year per se. Because I know the market has slacked off a little bit in September. So with that, Stephen, if you can explain to us a little bit what that means overall.
Yeah, we try to look at the market several different ways so we can look at the big picture. First of all, the market has fallen off in September, but that's a seasonal thing that happens every year, and I've got several of the year's reports sitting in front of me. It's the same curve every year. As we head into fall and winter, the sales volumes slow down. So that's not to say that the whole market is slowing down. It's just a seasonal adjustment. We look at it month to month so we can see what's going on, and then we also look at the market year to date. So we're going to go January through September 2018 compared to January through September of 2017 and every year before. And then we also look at what I call the same time period. So we're going to look at September 2018 compared to September 2017 and every year before. So when you look at those three different areas and then a lot of other numbers that we have, you can really see what the big picture is and see what's happened in the past and what you think is going to happen in the near future. So right now for 2018, the year-to-date numbers are just 1% ahead of 2017. I think even early 2017 we started looking at the market, and a lot of guys that, I don't do a lot of forecasting, I try to do more of what happened in the past, but a lot of guys that do forecast the market said 2018 is going to look a lot like 2017, and those guys are right because we're at 1% ahead of 2017, and I think even as we head into 2019 is going to look a lot like 2018. So as far as price increases over the last several years, that's been a little different than the actually closed volumes that we've had. If we look back over the last several years, in 2015 we had a 10% increase in closed volumes, and then we had an 8% increase in prices. For 2016 we had a 5% increase in closings and then a 9% increase in prices. 2017 we had a 5% increase in closings and a 14% increase in prices, and then in 18 so far we have a 1% increase in closed volume with a 6% increase in prices. So I think as we head into 19, I think we're going to see that closed volumes are going to be similar, so I'd say 1 or 2% plus or minus what 18 is going to end up being, which is very similar to 17. So it shows that we have a very stable, great, healthy market in my opinion. So we don't like to see huge increases and we don't like to see huge decreases. So for the last several years, just to have those moderate increases, and as we head into 19, I think most people are expecting prices to go up 2 to 3% in 2019, which is a great, healthy, moderate increase. It's not the huge 14% increase we saw in 2017, but I think I'd rather see the moderate increases of 2 to 3% on the volume and the dollar on the prices side too. So that's why we try to look at all different parts of the report from month to month, same time period, and also year to date, so we can kind of put it all together. So if you look at just month to month, you can get too excited or scare yourself, and especially if we've been looking at this report for 20 years now, and it's the same thing year after year. It's amazing really how the real estate market matches the seasons.
Yeah.
There's really no forecasting in it. It's done it for 20 years, so it's going to do it again. And you have blips and different things that happen that it'll correct itself a couple months later. But as we look at these reports here, we have several years in front of us. It's the same curve. we're going to head down in the fall and winter, and then guess what? In February and March, it's going to kick back up again and be a bit. We call that the busiest selling season as far as in the real estate world. So we always look forward to that. Actually, the activity starts somewhere between the middle of January and the middle of February, and then those closings start happening in March and April. So, we're always excited to see the first of the year come and sales and activity start to increase.
Right. So, with saying that, I mean, if you're a seller right now, if you're in a seller's shoes, to hold out and then expect price increases like we've seen over 2017, 2018, that price increase probably won't be there as significant in 2019.
Right. If you're a seller to say, hey, I'm going to hold out till 2019 or 2020 because I'm going to see a huge increase. I think we've seen the huge increases from the recession. So the recession went down, depending on what market you're in, quite a bit. And then we've recaptured all those losses plus some already. So to think that we're going to continue at double-digit price increases, I just don't think is going to happen nationally or locally. And we've talked about this too. The local market has always fared better than the national market. Middle Tennessee's blessed with a very diverse economy. The economy nationally is doing very well, but locally doing even better. So, we just, as we look at those different things, I think, we're happy to be in Middle Tennessee, and I think we're happy for a nice, stable market as we look ahead in the near future.
Yeah, because we were looking yesterday, the economic and housing meeting up in Nashville. They were talking about the national home sales being 1.5% lower, and if I understand correctly, in Middle Tennessee, we're actually 1% up.
Right. So there's a 2.5% spread
nationally,
which is not a huge spread, but it just shows, and as we looked at it over the last several months, the national market is, but anywhere in that 1 or 2%, it's not much, but the national market is a little lower than 2017, and the Middle Tennessee market is a little higher, but we're only 1% higher, so there's a good chance, depending on how the fourth quarter ends up, we're going to be somewhere pretty close to even to 2017, and I think the national market looks like it's going to be, a point or two below last year.
All right, and then the last kind of topic I have in here is just because I've been talking to several buyers lately, and they're kind of looking at, do I buy now? Do I hold off till spring of next year? What are interest rates going to do? I mean, we're noticing that the interest rates are climbing up. What are your thoughts on buying now compared to next spring?
Yeah, I mean, it's always, as far as a buyer's concerned, and we're really in a good position right now for the buyers and the sellers, because the sellers, like you said earlier, we've seen all the appreciation, not all the appreciation, but a huge amount of appreciation.
Right.
So we're only going to see a couple points, which is not the cost of money, you can make 2 or 3% just about on anything. But so for the buyer, prices are going to go up, so you can save a couple points. But also, the fall is a great time to buy a home because, you're not competing with the spring and summer traffic that is going to come here in 3 or 4 months.
Right.
So right now, as far as a buyer, as far as seasonal, is a great time to buy because you're probably going to get a better, hopefully get a better deal because you're not competing with as many buyers. As far as the rates are concerned, again, I don't like to forecast things, but I think 80 or 90% of the world would probably agree that rates are going to increase.
Right.
I mean, every banker that we talk to, and we issue this report just about, if not to all the local banks in Middle Tennessee, and when their feedback is rates are going to increase. And that's what we've seen the last couple of years. In fact, I think a mortgage broker told me, it wasn't too long ago, we were hearing 3.5%, 3 3/4. a mortgage broker just told me yesterday that they did a deal at 5% for a mortgage. So I don't know, if that's where we're heading. So, and I don't know all the particulars on that, but that's the first time I've heard 5% on a 30-year mortgage since I can remember.
Right. Yeah, they were. I think it was yesterday. They were talking about 8% interest rates. Was it in the early 90s? And a lot of people buying homes in the past few years would kind of scoff at 8%, but in the grand scheme of things, it's fairly cheap. When you look at back in the 70s, it was 15.
Yeah, and I think most bankers and some of the guys like we listened to yesterday will tell you that we're not heading back to 8 or 9%, but rates are going to start increasing, and on a $300,000, $400,000, $500,000 mortgage, a quarter of a point can add up. So for the buyer, honestly, if I'm buying and I'm going to get a mortgage, the fourth quarter of this year is a great time, to be a buyer, because seasonally less competition with buyers. The prices are still going to increase, so you don't have that risk of, hey, if I buy, the market's going to tank. I think we've got a nice, healthy market. The guys that talked yesterday, Edsel Charles continues to say that our lot shortage for new construction over the next 5 and even 10 years the shortage is huge.
Yep.
And what that means for us, even if you're not in the new construction business, if you're just in the resale real estate business, is that drives and trickles down to the resale business, because that new construction and new homes help alleviate the inventory issues that we've had. So inventories, that's another item. Inventories are improving, but we're still, locally, and again, look at the different counties. There's times that Rutherford County may only have a couple months worth of inventory. And a healthy market, some people argue it's anywhere between 4 or 4.5 months. It's a healthy market.
Right.
So we only have, in some places, a couple months of inventory. So the new home construction helps increase inventory and helps, stabilize the market, which is happening, but it takes so long. It used to take 6-12 months to get a lot on the ground and pull a permit. Now it's 2 to 3 years. So it takes, even though you see all this dirt moving and you see plats coming through the planning commission, engineers are busy, we will not see, the product come for, several years.
A little while. Well, that's good. And I know with the spurt, the growth that we've had, the infrastructure to keep up with all of it has kind of got Murfreesboro busting at the seams in places. That was funny yesterday when they said if you get caught in traffic, don't grumble. Just be thankful for a healthy economy that we're living in right now. So, well, I hope this was helpful to any of you out there listening. If you have questions about any of the information we went over, or would like to sit down and kind of look at the red report, give us a question, post us a question down there. Give us a like or a share that somebody that might benefit from this, and we will continue to try to bring you this report every month, just to kind of give you a little bit more in depth of what the market's doing, what it looks like from people who are looking at it every day, and not just your casual drive-bys looking at the market. So, Stephen, you got anything to close us out with? Or
I appreciate you having me today. And market's good, market's healthy, and I think we're heading into a good fourth quarter and great year next year.
All right, good deal. Well, as always, if we can help you out in any way, let us know. See you soon.
Thank you.